there was little to no accounting. Like that's the thing that gets left. They forget about it. Oh, I'll do it later. It's just receipts, or my tax accountant will do it. Because let me ask you, restoration owners, are you tracking how much you're reducing your invoice for each insurance company?
Most aren't.
You should probably be.
Exactly. What's up, restoration contractors? Alex Duta here with the Albi After Hours podcast. As many of you know, I grew and scaled a restoration company out of my dad's garage to over 8 figures, and now I'm on a mission to help you grow and scale yours. Today, we actually have the honor of doing our second official Albi After Hours podcast. The first one was Kevin Dooley of Kahi. The link is below if you're interested in that one. And today we have the pleasure of bringing Tiffany Baer with Baer Business Services to the podcast. And we're going to be talking about accounting and get down into the nuts and bolts on why restorers need to implement accounting right away and all of that. So before we get into that, what I'd like to find out more about Tiffany is her background, as I hear she comes from the restoration industry. And what's actually really interesting is that she was a GM for a large restoration company that's well known within the restoration industry out of Texas. And then she found a problem with an accounting and decided to help restorers with their accounting services. So without further ado, Tiffany, if you don't mind, just quickly introducing yourself, your background, and things like those.
Yeah, thanks, Alex. So like you said, GM up for a restoration company. Have my bachelor's in business, bachelor's in accounting. I have a graduate degree in business as well. I'm sitting for the CPA exam. I have a background as an analyst in banking. Came to the restoration world via a wonderful gentleman. Worked there for a while, loved it, and I saw the growth and potential in this industry. And one of the biggest reasons it's not is because of finance.
Okay.
You really having to understand your numbers and knowing what's going on so you can really scale and grow. So ended up deciding to start my own business. Now I am servicing primarily restoration companies, specifically related to cash management and profitability. So all accounting aspects. Just want to help grow everyone. There's so much potential here.
Awesome. So let's take a couple steps back. I mean, you said obviously you went to school. Where did you go to school, by the way?
Arkansas State University. Go Red
Oh, wow.
Wolves.
Are you originally from Arkansas or are you originally from Texas?
Arkansas.
Okay. So you were born in Arkansas, raised there. You went to Arkansas State University, awesome degrees and stuff like that. So how'd you end up in Texas, might I ask?
My husband relocated for
Got it.
work. He works for a large manufacturing company.
Got it. And with that accounting degree, you said you had, experience in banking, things like those. What kind of jobs did you fulfill before you actually found the restoration industry?
Sure. I was a commercial credit analyst. So any company that's in middle market that needs loans for their commercial businesses, we would underwrite the loans. I would analyze companies for profitability to see if they could service the loans. So I have a lot of that already analytical background of what makes the company tick to be successful.
Awesome. And how did you met a gentleman, we could probably mention his name, Jeremy Newman, right? You met a gentleman. How'd you end up meeting Jeremy and getting into the restoration industry?
Funny story. Facebook
Okay.
posted a job, I responded, and he honestly thought he was talking to my husband, and it ended up being me, and it was fun stuff. And so, we just hit it off. He's a great guy, love him to death. Him and his family are awesome.
Awesome.
So yeah, it's been a great experience.
Got it. That's cool. And when you started with Jeremy, what did you start doing within restoration right off the bat? What were you hired for originally?
A coordinator,
Okay.
like ground
Got it.
level. I was finishing my graduate degree, so I was working and finishing it. So I was like, hey, let's get in, and wanted to really focus on processes and cash flow, and just went from coordinator to production manager to operations manager to GM. So just really grew within the company.
That's awesome. And all of this happened with what time frame did you grow from coordinator to all the way up to GM?
A little over a year.
Wait, what? A year?
We grew that fast.
Wow.
He essentially tripled revenue in a year.
Tripled. Wow. Okay. And what would you say, I mean, without giving secret away, right? A secret sauce away, What would you say was the leading driver of success of that company and that organization tripling your revenue within a year?
Oh, you mean by besides
Yeah.
me?
Oh.
Just kidding.
Oh, okay. So Jeremy, just an FYI, if you're watching this, Tiffany takes full credit over you tripling growth and thinks that
Full
she
credit,
did everything.
100%.
100%, right?
Yeah, exactly. No, honestly, what it was having a great team, all of us having the same vision, setting processes, and working collaboratively together to execute Jeremy's vision.
Got it. Awesome. So it took a visionary like Jeremy who sees the future and
Mhm.
has big goals and aspirations, and then you're saying that you need a very strong team that believes in that vision, buys into that vision, in order for that vision to actually um, occur, right?
And execute it.
Awesome.
You got to execute
Okay.
it. Hmm.
And tell me more about like the restoration industry versus other industries. What are some of the, coming from an accounting background, coming from, obviously you worked in credit as a credit analyst, you have all these degrees in accounting. What shocked you the most from an accounting perspective when you came to this blue collar response reactive industry?
There was little to no accounting. Like that's the thing that gets left. They forget about it. Oh, I'll do it later. It's just receipts, or my tax accountant will do it. That's the worst approach because we need to see daily, we need to see how profitable we are, we need to see what we're doing. You need to know what the job itself is doing. That's the thing, job costing, we were going to talk about that, is specifically knowing not only what a job is doing, the department doing, the company's doing. I like to look at three different levels of how profitable we are.
So you're telling me that a typical restoration company, and the smaller they are, the more it applies, views accounting as solely a function of how much do I owe the government at the end of the year. And they do some sort of accounting or some sort of bookkeeping to say, okay, look, I made this much money, I owe this much money, and I'm going to follow my responsibility through to pay the IRS. And what you're trying to hint at, I think, is that there's more to accounting than just the tax liability that my company has and what I'm legally obligated to do. And you're telling me that accounting could help in other ways aside from that.
Yeah, you can't make business decisions based off of guesses.
Okay.
You really need to have hard numbers to really look to see where are my best efforts being placed? Where are my marketing dollars being placed? Am I getting return on that? Is my labor, is that the labor cost for this job? Was it indicative of that job? Did I spend too much labor? Not enough labor. Like, where are we at? Like, what did we do well? How can I replicate it? What didn't I do well? And how do we not do that again? Numbers will tell you that story.
Got it. Interesting. So I don't know how much you know about the Restoration Accelerator and our mission to help restorers grow and scale their businesses, but within the Restoration Accelerator, we kind of split restoration businesses up into like three different categories. Our first is like laying the foundation, so that's like the startup up to $2 million. They're going out there, they're first going to market, and hey, we broke off. We're not a project manager anymore. We're a business owner. And then the second step would be proving the model. So that's from like 2 to 6 million. You're going out, you're actually, proving that you can grow within the industry. And once you gain confidence there, the next step is scaling, right? So 6 million and up, 6 to 10 million. So I think at different stages within these businesses, and I think most of our audience falls somewhere between the 0 to 10 million, you're going to be doing different accounting functions and you're going to focus on different things and implement different things. So what I'd like you to help guide us is, let's take that startup company first and talking about laying the
Sure.
foundation. What are the initial things that just a startup restoration companies needs to do and they're not doing? So I am coming right now. Let's start with incorporating the business. I just incorporated the business. I have my EIN number. I have my tax ID number. I am now ready to rock and roll. What do I need to do to make sure I'm ahead of the game accounting wise?
First and foremost, set up the chart of accounts in your accounting system that's indicative of the restoration industry. So we want to look at, cost of goods sold or cost of services, sales. We want to break things out by class. I specifically like QuickBooks Online. So, say I want to look at everything mold related, I want to look at everything water mitigation, contents, rebuild, however your business is structured, split those out
Okay.
so we can see specifically what that is. So, it's really the chart of accounts, getting that set up, your classes, getting your services, what you're going to be offering, and then attach the receipts to the transactions
Okay.
because it's a great support tool for end of the year, for auditing. You ever have any questions, it's right there. You have to retain those documents anyway. Put it electronically, put it in there.
Okay. So we're going to go in there. We're going to set up a chart of accounts, which is basically all the different accounts that, like all the different categories of our expenses. For those of you who aren't familiar with that, we're going to split up our income. So we're not just showing, hey, how much money do we make? We're going to split up our income into the different categories. So if we do mitigation, recon, and mold, we're going to split it up, right? And then we're going to link our bank accounts. And you said use QuickBooks' receipt tool or use a receipt tool to link those receipts to those
Yes.
transactions. And what picture does that paint? So that's laying the foundation. That's the very basics, the very least amount of work that you should be doing for your books. And what is that going to do for our restorers that are here? What do they now have the ability to do? And what business decision can they make because they're doing this?
So you'll be able to see cash that you're making in each different service.
Okay.
You can see the revenue and then you can see the cash out that's going towards each of those. So you can see what sectors of your business are profitable, which one maybe you need to have a little bit more efficiency in, and to see like, are my costs, my overhead costs too high? Now you have to take that into consideration. What level of business are you at? Where are you at in the growth model? So some small businesses, they may have higher overhead because those are fixed costs because they're trying to get to that level. So there's a lot of things you have to take into consideration, but that's a good starting point. Having those numbers clearly laid out so you can see what percentage of your income each thing is costing you.
Okay. So if we do all of this properly and properly lay out our chart of accounts, we can then run a profit and loss statement and view that, what would you say, monthly, quarterly, weekly? How often would you view that profit and loss statement?
I would definitely look at it weekly. I review my clients
Okay.
weekly, no less than monthly.
Okay.
And then I do trend analysis where I'm looking month over month, quarter over quarter as we grow. Um, Also, I just had a conversation with a new potential client, and I said, how long does it take you to do a water mid job? Standard job, 3 to 5 days. I'm like, do you want to wait a month to figure out if you're profitable on that? No, you need to be doing these entries daily
Hmm.
and looking at the
Yep.
projects daily.
Okay. And when we're looking at that profit and loss report on the laying the foundation on the very basics, right? The first thing we're going to look at is income, right? And like you said, we're going to split it up by different categories, right? So how much did I make this month on mid? How much did I do on rebuild? And what percentage is going there? Then you mentioned the second thing, you kind of mentioned cost of goods sold and overhead. So I think maybe we recap real quick, like what's the difference of cost of goods sold versus overhead? And why should they be separated on your P&L?
Yep. So, in a very simplistic terms, whatever it costs you to produce that revenue is cost of goods sold.
Okay.
So your direct labor, your techs that were out on that project,
Okay.
cost of goods sold. The material you used on that project, cost of goods
Okay.
sold. Those things that specifically that you can trace back to that one project is cost of goods sold.
Okay.
Now you can also put some departmental costs in there, like your field software. Like it's not for this one project, but you wouldn't use it in any other part of the business. We could put that in there. There's some flexibility. Overhead is what you have to use to run the business, but it's not necessarily revenue producing items. So it's your general manager, it's your bookkeeper. You have to do it, you have to have them, but they're not the ones making the money.
Okay. So now, if we run that profit and loss statement, we're going to look at our top line revenue, we're going to look at our income, we're going to look at our cost of goods sold. If our cost of goods sold are high, what could that be an indicator
Mhm.
of?
It means you're not being efficient
Okay.
with your resources.
Okay.
You're also possibly not maximizing your revenue on the job.
Okay.
So that's where your project manager, your department manager, coordinator really needs to be analyzing these jobs in conjunction with the financial side. It could be where we're not maybe allocating the cost correctly. Should it have been in one place and then it wasn't another? So there's a lot of things that we dig into to look to see where these numbers, the story that it's painting.
Okay. And especially early on when laying the foundation, could forgetting to invoice projects also screw up our cost of goods sold numbers?
100%, especially if you are looking cash basis, accrual basis, money in, going out, that's cash basis accruals, like this is due to me, but I don't have the money yet. We usually use modified cash in the restoration industry because you have accruals, but you're really looking at everything cash basis. However, I haven't seen one company that does 100% a true accrual basis. So you have to be very cognizant of where is your money at and where is that process and those costs being, aligning with the revenue
Got it.
that you got on the job.
Okay.
So
Do you have any thresholds for cost of goods sold percentages that you have seen within your experience that you're comfortable sharing? And if not, that's fine. But like, what should a
yeah,
typical, let's just say, a company that has a healthy mix of recon and MIT, what should the cost of goods sold fall in roughly? And what about a company that's only doing MIT or only doing non-reconstruction work? Do you have anything that you could share there?
yeah. So I don't like to see cost of goods sold any higher than 50%.
Okay.
Because you overhead and then you have to have profit. You really need to be within the 50% range. If you're more focused on the like water mitt side, that's a little bit more profitable. I've seen, profit margins as high as 80%. I feel like that's not typical, but a good one would be to have a gross profit percentage around 60, 65, maybe 70.
Yep. Yeah, and I think we align very well there. When I tell clients and what I kind of look for, and I typically like look at it not in profit, I look at it in cost, so the inverse. But I look for an emergency service based company to be around 33%. That's kind of my spot of
Yeah.
costs, right? So we could do the alternative and do 67% profit. And then yes, I agree with the 50-50. You can get down to the upper 40s if you need to, but depending on how heavy your reconstruction work is. So
Yeah.
okay, so we're back and laying the foundation. We're running this profit and loss. We did $1 million worth of work. It was mid only work. We spent $330,000 on labor, trucks, and paper and things like those. We're good. We spent $500,000 out of that million on all this stuff. Now we're asking ourselves questions. Well, what happened? Did we forget to bill something? Okay, well, obviously, if we forget to bill something and we actually did 1.2 million out of with that 500, well, now our numbers are back. Did we just waste a bunch of time? Let's look at where was that time located, right? Did we spend too much on one thing, right? So that's just kind of the basic inference. And
Mhm.
now let's go back to the overhead. So you mentioned overhead are costs that are not directly associated with projects, so offices and things like those. So what what overhead percentages would you say you shoot for, and what is the one factor that impacts overhead?
So I like to see overhead no more than 30%.
Okay.
So you really, for a service industry, you should be making net profit of 20%.
Okay.
And the reason I say you minimally need to have 20% is because yes, it's profit, but what the P&L doesn't show you is the monies that's required to service the debt that's on the balance sheet. So then that profit part has to pay your truck payment. If you bought your building, you have to pay the loan
Hmm.
payment, any accounts payable. So those are monies that are used to that. So your true like cash profit is much lower. So from based off the P&L, minimally 20% net profit.
Got it. Perfect. And obviously, if you're going to have a 30, or let's say you go up to 35 because your cost of goods are lower, right? The larger your overhead, that should signify a company that's wearing a bigger shirt, right? So if you're looking to grow, you're going to be wearing a bigger shirt than you need. Maybe you have that one salesperson that's not producing yet, but you have them on staff. Maybe you already have that coordinator that's doing 5 jobs a month, but you know that coordinator can get up to 30 jobs per month, right? So you have that, and
Right.
yes, you might have a bigger overhead, but you have to ask yourself, okay, what's the question? Alternatively, though, if we're paying plumbers up the wazoo and we have 30% in marketing costs alone, right? Perhaps that's a time where we need to cut back and there is no logical explanation, right? So right off
Hmm.
the bat, laying the foundation, you're telling us we go into QuickBooks, set up our chart of account, hook up your bank accounts, invoice through there, and then we're running a weekly profit and loss statement. We're viewing these three categories and we're making these decisions on the health of our business within Alex and Tiffany's rough metrics of, the 80-20, right? So 80% cost, 20% bottom line. That's a healthy business.
Yep.
Okay.
Yep.
So now let's say we get to the point where we're starting to prove the model, right? We're going over 2 million now. We're getting to the point where, we're starting to prove the model. We're in that 2 to 6 million range. What things are we going to start implementing on top of the basics 101 that we talked about earlier?
Yeah, so this is when we start looking at return on investments. We start looking, okay, our marketing dollars, what are we getting from our marketing dollars? What does it cost to acquire this customer? The average invoice from those dollars. So we start looking at a lot more analytical type things, which in the accounting world would be more like controller level. So we're analyzing, we're looking at trends. We are also projecting out. You brought up a great point of, okay, I have a coordinator who's doing 5 jobs, but they have the capacity to do 20. I have a marketing person. So I'm looking at projections going forward. I'm saying, okay, when we get to X dollars, I know I need one more coordinator, and then they have the capacity to do this. How do we build the company, and where do we want to build the company? We look at what we've done in the past, and we look at what we want to do in the future. And then we look at, okay, now we've got to buy a new truck because we have a new lead tech. We've got to buy all this other equipment. How much money is each piece of equipment making? Where do I need to invest? Do I want to start branching out into contents now because I keep giving it away to somebody? Maybe I need to start doing it in house. We start making those types of decisions.
Awesome. So yeah, if I were to chime in here, proving the model, we want to know exactly what our numbers are, so that way we have this model and it's proven within X amount of time. So then when we get to the scaling phase, we know exactly where the money is going to go to scale, and we're going to blow up. So how much revenue should a truck be producing? How much revenue should an employee be producing? What should my marketing costs be in a percentage? What are my most effective marketing strategies? What are my least effective marketing strategies, right? What should my job costs be? Should we take on reconstruction work? Should we not, right? So we have these numbers where we get it to science. And at Rome Xterra, when we would do we're in the scale phase, way past that, but even in this phase, we would go do business planning retreat. We would take a P&L of last year, and then we would tweak it, mark it up, and then we'd create a budget for the following year. And we got to the point where we were literally hitting numbers within 1 to 2% of where we were at. So we said, okay, look, this year, let's say we did 5. Next year, we want to do 8. Okay, great. Where's that $3 million coming from? Well, we hired 2 more reps, and we know that an average rep brings in $1 million. Great. Our cost last year, we needed 6 crews to do this business. Now we need 9 crews. So let's add the salaries of those 9 crews. And then we saw the percentage go down. How much do we expect to spend in waste? How much do we expect to spend in this one? And it's not always a direct percentage, because the larger volume you go, if you have efficiency, let's say your crews, right? 6 crews can cost $600,000, let's say, a year for 6 crew chiefs, but those 6 crew chiefs could produce a lot more than 5, right? So yeah, I love that idea. I love it. Now, job costing. Talk to me more about that. Like, why is job costing per job now important versus before we just said, hey, look at it overall, right? Now we're saying, hey,
Mhm.
we should take a look at every job individually. Why is that important?
That is extremely important. So I want to back up just a little bit. For in this level, what I also start recommending is real job costing. We do like overall general job costing at the lower levels, and this is when I implement inventory
Okay.
for consumables.
Okay.
So I am tracking specific dollars per each job, and then I'm also tracking labor specific to each job. So every single dollar should essentially be accounted for on each job. So now we're really looking at, the age old question is, in the restoration is, do I need my own, matrix, um, I'm missing it right now. You know what? An exact, your own price
There you
list,
go.
custom
Okay.
price list.
Yep.
It's the old 10-10 rule. That makes absolutely no
Hmm.
sense, right? So you're really seeing what it costs for you to do the job.
Okay.
And that's why it's really important, because you can't make decisions on what you want to do going forward if you don't have a good foundation. And now we're getting, dollars and cents, to know what we're doing.
Okay. Now, talk to me a little bit more, and you kind of alluded it in the earlier phase. We talked about accrual and we talked about cash, right? And is it your opinion, the first question is it your opinion that a restoration company in the 2 to 6 million range should be making business decision on accrual accounting? Yes or no? Are you looking at a cash P&L
Both.
or are you looking at accrual? Or like you said, both?
I'm looking at.
Okay. Why do we
You have to
not
look at
just
it
look at a cash P&L? What's the difference, and specifically to restoration, between accrual and cash? And that has a lot to do with the way our industry works.
because you have money owed to you. Like, how long does it take for you to get the money from the
Okay.
adjusters? Where are we at in that accounts receivable process? So we develop that whole standard operating procedure of collecting on accounts receivable. But if you're looking at a cash basis, that doesn't show up. It does not show you what monies are due to you because it only shows you what monies you've collected.
Okay. So let's take an example here, because I think this is a really important concept to kind of talk to restorers about. And what I'm going to do here is I'm going to share my screen. Let me know if you can see my screen. Okay. And let's take this example of cash basis, and then let's go down here in accrual basis. And then let's just go income. Let's go cost of goods sold. So we'll just call those COGS. Let's go overhead, and then let's go net profit. Right? And then here in cash basis, let's do the same thing. Let's just copy this. Right? So let's paint a picture, right? When we say a company is doing $5 million a year, what do we typically refer to when that company does $5 million a year? Are we talking about accrual income or cash income? Typically.
Accrual.
Okay. So what does that
Accrual.
mean? What do? They invoiced $5 million this year, right?
They invoiced, they did work of $5 million, whether they received it or
Okay.
not.
And then their costs, they incurred costs, and typically restoration companies pay costs right away, right? Like your truck gas has to be paid today, right? Your employees need to be paid today. Some vendors can wait a little bit, but typically if you have a cost of goods sold of 50%, you're paying that out right now, right?
Exactly.
Okay.
Yeah.
So 2,500,000 is our cost of goods sold, right? And then let's go back up to cash basis real quick and say, okay, income of 5 million. If that company is collecting on a 30-day, could we say it's safe to say roughly around 70% of that 5 million is coming in to the bank? Is that roughly right? What
Yeah,
percentage?
that I mean,
Let's just say a typical company that's producing 5 million, how much are they typically collecting within that specific year?
there's so many factors because you have to look at job size and there's just a lot. But what let's just go with that, to keep it
Let's just
simple.
make
It's
it
like
simple.
they
They
collected that.
collected 4 million, right? There's no way, like, very seldom do companies that produce 5 million actually collect 5 million, right? Because obviously it takes 30
Yeah.
days to collect. So, there's some money that's waiting to be collected the following year, right? The costs, are the costs going to be the same? The cost of goods sold in both P&Ls?
Yeah, typically they are because they're going to be paid when due. Most of your COGS are going to be there's not a typical, payments 30 days later like you see in corporate America in this industry. Everyone wants to get paid now.
Got it. And then your overhead, we should have about 50% or 30%. So 1,500,000 here, right? And it's the same in cash basis, right? Because you're not waiting to pay your bill to rent, or you're not waiting to pay your marketer or your GM, right? So now we have this here. And then let's talk about net profit, right? So in this situation, we have 4 million minus 3 million. We have a bottom line of 1 million. Okay. And then in here, we have a net profit of 2 million, right? 2 million, 3 million, 4 million. No, it's 1 million too.
I can't see it. It's too little.
Oh, wait, no, here we have no profit, actually. Hang on. That profit is going to be zero, because 4 million minus 2,500,000 minus 1,500,000 is 4 million minus 4 million, which is zero. Yeah. And then here we actually have a profit of 1 million. And sorry that it's too little. I'll try to make it bigger.
No, it's okay.
Is that better?
No, I just need my glasses.
Oh, okay.
But it's fine.
Great. So anyway, so tell me why this same company that's a $5 million a year company runs an accrual profit and loss, and it's showing them that they're profitable. Then they're making a 20% bottom line, meaning they produced 5 million and they made $1 million, but on cash basis, they made $0.
Actually, they made less than $0. Because let me tell you,
Okay.
this is why most companies fail. This is why most companies tank. Even if they show a profit, they go out of business
Okay.
because they're not managing cash. Because remember what I said, the profit isn't 100% profits because you still have to pay your debts with that.
Bingo.
So they not only didn't make money to service their regular ongoing to keep the business going, they didn't make enough money to pay their debt.
Okay.
So now I'm going to go belly up.
And on top of this, this is the 50%, 30%. So this is the 80-20 rule that we just showed you here. But the 80-20 rule, if you don't collect all of your money, meaning you collect everything due on receipt, you're saying we're flopping. So now what about the companies that make 10% profit and they're happy with that? Or actually, the cream of the crop. I heard that the DKI national average, which is the cream of the crop, is making 7% net profit. Are they making money?
No.
Okay, so they're basically, the restoration business owners are paying to have a toy, to have a company.
Mm-hmm.
And the insurance companies say, oh, we're making too much money, right? So the other thing here, right? The only difference between accrual and cash, and the reason we're bleeding that cash, is the fact that we're not collecting in time. And that's on a 30-day turn on receivables, that example of the 4-5 with the 0, right? But if you're collecting more than 30 days, if you're collecting on a 60-day or 90-day, you're hemorrhaging cash. And what are you going to do? You're going to go borrow money from the bank. And what are you going to do with that money? You're going to pay interest. If you're good in today's day and age, you'll pay 6% interest. If you have some credit hiccups or stuff like that, you're going to be paying 10%.
Mm-hmm.
So, Tiffany, this stuff is not unnecessary. It's like really important.
If you want to succeed, you have to do this. That's where I feel like the disconnect is owners want to focus on the production and say, I need to pay my staff, I need to do the work, and then they forget about this. But yet, if you forget about this, this is what tanks your business. This is why you go under. This is why you lose money. This is why you owe money and you can't continue as a company. And all those people that are dependent on you for their wages, their families, it's gone. You're doing a disservice.
So then why is this such a hard concept for the little restoration company? Because we just went up to 6 million now, from 0 to 6 million. Why is this such a hard concept for that restorer to understand? Why are restorers not doing this stuff? And why should they be doing it? Well, we talked about why should.
Yeah, well, quite frankly, I think the reason they don't is because they haven't been shown why. And I think there's a bad stigmatism out there of bad bookkeepers who don't do really good job or they don't really show accuracy. So they're not getting the level of what they really need. And so, that's a hurdle that I'm having to overcome to, trust, because that's finances. That's somebody's livelihood that they are trusting with me.
Of course.
So it's something to try to figure out that balance of, working with somebody and then having them trust. But it is extremely important.
So, not to put you in the spotlight now, because I know you don't like being put in the spotlight, but you mentioned about your typical bookkeeper. Do you think your typical bookkeeper that has an accounting degree, or Tiffany 10 years ago, understood how to properly show numbers and how to properly do these things for restoration contractors? What
No.
about another bookkeeper that has experience in construction? I'm an experienced construction bookkeeper. Are they still well versed enough to understand fully, turnkey, what they need to do for the restoration industry?
I would say they have a better chance of segueing over,
Okay.
but I think there's enough nuances in the restoration industry that are separate. Because let me ask you, restoration owners, are you tracking how much you're reducing your invoice for each insurance company?
Most aren't.
You should probably be.
Exactly.
That's lost revenue. You earn that revenue,
Yep.
but now you're not collecting it. You need to track it
Yep.
because you need to see which insurance companies aren't paying, and you need to figure out why they're not paying, and you need to make a course correction in your operations to mitigate that.
Makes sense. Yeah, and I'll chime in. So we hired a construction specific bookkeeper, and we still had to do a lot of training to get that construction specific bookkeeper slash accountant to understand restoration. Because most contractors
Mhm.
get paid ahead of time, they get paid, withdrawals in advance. Like she understood the whole lien waiver process and all that stuff, but she didn't understand the fact that there's insurance at stake. She didn't understand the fact that we're an emergency service. We produced a work beforehand, right? And it's kind of like restoration's a hybrid of like your home service industries and construction kind of together. It's a hybrid of the
Yeah.
reactiveness of plumbing, HVAC, all those, but with the complexity of construction. Go ahead.
And not getting paid
Oh yeah,
immediately when you do the job.
exactly.
You have to wait.
Exactly.
Hmm.
Awesome. Well, this was really interesting. And I think, key takeaway, if you're a restoration contractor right now sitting on this call and you don't know how to answer those questions that we talked about, just up to 6 million, you're not that big. Not, well, I mean, the average restoration contractor does like 1 to 2 million. So pat yourself on the back if you're at 6 million, but we're not talking about a $40 million operation, right? We're talking about a mom and pop, proving the model operation. If you're not doing these things, you need to start doing these things, whether you hire somebody like Tiffany or whether you go do QuickBooks crash courses on yourself. You're doing yourself a disservice, and you're basically, as an owner, I always describe like you're paying yourself for a job. Like you're literally like putting all this investment and all this money in to just have a job at the end of the day, where you shouldn't have that. So Tiffany, tell me more about how you particularly help restorers and what Baer Business Services does, and how you don't help restorers and what Baer Business Services does not do.
Sure. So we focus mainly on the accounting, finance, and the HR components. So a lot of your professional services for the restoration industry. So my motto is I grow with you. My goal is to make you grow. I want to help you grow. So I can start just your bookkeeping. Then maybe you get large enough, you need somebody on site. Then I just do the back end bookkeeping where I'm reviewing and making sure they're doing everything correctly. Then maybe we grow to the point where, okay, it's controller level services where I'm starting to do analytical type things. We're doing projections. Maybe you grow enough, you're in 6 million, you need a CFO. You really need a CFO to start doing strategic planning. So I grow with you. I have services from start to finish.
It's awesome. Do you do taxes?
Now, now what I'm no,
Okay.
I don't do taxes. That's the only thing.
Okay.
So, and this is what I want to tell everyone. This is how I relate it. So, the restoration industry, like you said, is under the umbrella of construction, right? You're not going to have a roofer do what a mason would do or a tile expert, or are you going to have your waterman guy do the rebuild? Like, no, like they're under the same thing, but they're totally different. They're specialized, and that's what I do. I specialize in job costing, which we call managerial accounting. So I'm internal. I help you grow profits, cash flow, that, and so I leave the tax expert to the tax people. So
I see. So you're really focusing on the one area that restorers kind of do not look at. They might have a great CPA that does their taxes and goes through QuickBooks and pushes a bunch of buttons to make the taxes go away, or some restorers might use TurboTax. And then in your
yeah.
end, you're focusing on how can I help you understand finances and things like those. That's awesome. That's very great.
Mhm.
So now let's talk a little bit about your software stack, right? And the first question that always comes up, and I have a hard time for whatever reason, just telling people, hey, use QuickBooks. And obviously, QuickBooks is great. There's a bunch of other platforms out there. People tend to say that they outgrow QuickBooks. There's a big controversy there. There's a controversy between QuickBooks Desktop and QuickBooks Online. So let's talk about that just briefly. Like, what is your accounting software platform of choice, and why can you do everything that you need to do in that software platform?
Mhm. So I only use QuickBooks Online for my clients. I will not use another software platform. And the reason I don't is for the online cloud-based software that allows for remoteness, for timeliness, also syncing to other platforms I use when higher level financial analytical type things. It's online all day, every day. It's just you're not going to beat it. It will do what you need it to do for this industry. Will it do like enterprise type things? No. But guess what? This industry isn't that. For what restoration um, owners need, 100% it will do it. You just need to know how to do it.
Can you successfully run, let's grab an arbitrary number. Do you think you can run a $20 million restoration company with full-blown job costing, full-blown like analytical data off of QuickBooks Online? Can you run it better on QuickBooks Desktop or Sage or somewhere else? Do you think you can do it better elsewhere?
I wouldn't say that you could do it better. What I would say is that online allows for other third-party softwares to like partner with in conjunction, which makes you have a better, like you said, a tech stack. So they talk better to these other platforms as to those other ones.
Okay. So let's dive into that a little bit, and a little shameless plug here on my ethos and my side. But why is it important for your job management system and your CRM to talk to something like QuickBooks?
Double entry.
Okay.
All day, every day. It's reduction of errors and time.
Okay.
If we're entering into your job management software and then we have to turn around and enter it into the accounting software, humans make errors. It's going to happen. And then that's a lot of back and forth. That's so much time. If we can automatically sync that information and it's a push and pull, like you have reduced that 30% overhead significantly just by doing that.
Now, what about the data that lives in QuickBooks that doesn't live in the job management system, or better yet, the data that lives in the job management system that doesn't live in QuickBooks? Is there a correlation of that data being combined together to help you better make decisions?
Yep. So I have another software that I use for financial planning, business planning, scenario modeling. So I can take Albiware's data and I can export it, and then I can take QuickBooks and I can sync it, and then it just, I'm able to see a lot more higher level things. So it's like the perfect combination because the way Albiware has the things reported, I can take that like non-financial data and marry it with financial data so I can get your KPIs. We can start tracking. We can develop metrics, scorecards. So it's a lot of things that just really complement what you guys do.
Got it. Yeah, I think that was well said. I mean, I like to think about it as entrepreneurs, we're the doctors, and our financial data is like the quantitative metrics that you can do, like blood pressure, heart rate, things like those. Your other systems can be your qualitative, right? Like looking at, hey, is the skin yellow? Is the skin red? Does he have a rash? Does he have this? Does he have that? And when you combine the both together, you can make proper diagnostics on the health of the business, and then you can treat those diagnostics by making business decisions. So that's awesome. So this is great. No, I love this. I really love, like, as you can see, we're both passionate about this. I love powwowing and drilling down. The last topic I kind of wanted to cover is, as many of you watching this video may already know, we do have a new program at Albiware. It's called the GAP program, Growing with Albi. Zach Martin actually came up with it. So if you love the name, it's my name. If you don't like the name, Zach actually came up with it. But the goal of the program is to bridge the gap between the business decisions and the software side, right? Like obviously software does a lot of things, but you could have QuickBooks, but if you don't have Tiffany, you're not going to maximize that. So we brought on a bunch of different vendors and a bunch of different people. I wouldn't call them vendors. They're people within the industry. They're not selling anything to us. They're just genuinely there to help. So Tiffany is actually a part of it, and Baer Business Services is a part of it. And Tiffany, can you tell me more about what you are giving to Albi customers and why you're giving things away for free?
Yeah, so what I want to do is anyone who comes on with Albi, there's going to be a transition. So I help you look at your chart of accounts to make sure it's indicative of the industry. So you're getting that better information. we just kind of go through and I make some recommendations that will propel you in the right direction. And then, if you say, that's great, but I don't want to do it, then we can have that conversation outside of it. But what I want to do is set you up for success. And I just feel so passionately about what you guys at Albiware are doing. I just love it. It's a software that's intuitive, and your techs will actually use it, because it doesn't matter if you have it, if you don't use it.
100%.
Been there, done that. Got to use it. So that's why I love it, and I think it's just going to push everyone in the right direction into the future. And so I want to be a part of it. I love the growth. So I think it's great.
That's awesome. Well, we're honored to have you a part of the program. We're blessed, and you've actually helped out a lot of our clients. You've done a great job. So thank you for that. Keep up the good work. Hopefully the labor shortage doesn't really hurt as badly as it's hurting right now for you. But yeah, this was fun. We should definitely do this more often. And any last remarks that you would like to add to everybody before we wrap up the call?
I would say, don't beat yourself up.
Okay.
It's wrong. That's fine. Let's just fix it. Let's work it out and move on. It doesn't matter. Let's just make that first step in the right direction and, push forward.
That's awesome. Yeah. I mean, we all make mistakes. Let's bounce from them. Let's learn from them. Right. So.
Exactly.
Great. Well, this was awesome, Tiffany. Thank you so much. Thank you for everybody who's watching. Like, subscribe, all that stuff. I got to get better at telling people oh my God, Restoration Nation, this was absolutely phenomenal. Please give us a like, give us a subscribe, comment in the bottom, share it with your friends, and
smash that button.
Smash that like button over there. But yeah, I'll have Connor whip up a little animation of like, subscribe or whatever.